Title goes, the Saudis need those high oil prices. And the reality behind it is the U.S. or Western oil companies need the high oil prices. I quite disagree with this headline. Nobody's trying to do Saudi a favor. Nobody. I know that. Um, and this brings up a point. I've been saying that I would be nervous about getting in oil because I keep thinking it's going to go back down because the demand's not there because no war actually started yet, and I don't see it happening. I think it's going to be this spring, but I just don't think it's going to be right around the corner. So I keep thinking it's going to go down a little bit. But this article goes into a couple of highlights on it. The question is whether the world's largest oil supplier, Saudi Arabia, or really Russia maybe, needs to raise prices to sustain ramped up spending intended to calm its citizens. Now, Lindsey Williams did talk about, they're trying to foster unrest in Saudi Arabia and topple them. Yeah, I think that is a fact. I think that is a fact. And actually, when the Saudi regime topples, there's going to be some serious high prices for oil, and they're going to stay. Higher prices would be bad news for Western governments, which need affordable oil to nurture their economic recoveries. So that is one reason I think the prices they'll fluctuate. They'll do anything they can to bring them down. There's one thing I think's going to happen, though. Because when this attack happens with Iran, you're not going to see any oil coming out of Saudi. And I don't think anybody knows everything for certain because that's quite an obvious statement, I mean, yeah, there's plans, but it's not 100% rigid plans. And I think that when this war with Iran occurs, there could be a lot of damage to Saudi oil fields, which will set it back a long period of time. So that could be very bad for a lot of things. And that's where you might see silver really fly to those crazy numbers of like a few $100s an ounce. That's where you might see it go that high. This goes on to say that oil sales make up 80% of Saudi government revenue. Head of the Kuwait-based global investment house, he stated that 2 years ago the kingdom needed an oil price of a barrel of about $70 a barrel to pay for its budget without tipping into a deficit. For 2011, the Saudis' break-even oil price is estimated at about $80, and in the future, maybe a few years from now, it'll be $98 a barrel. But they don't really need $108 barrel oil. And really we're going by the Brent price, which is a hell of a lot more than $108. And I want to state something here, about these oil prices now. This is a fact. What you are being charged for at the pump is not the WTI, the $108 a barrel. You're being charged the Brent price, which is much, much, much higher. It's way over 120 something dollars a barrel. What they do is the refineries they actually get this over in the Gulf. It's called light Louisiana crude oil. It's actually the Brent oil, and they will pass on to the consumer the Brent oil price, even if they're getting it at the West Texas intermediate price. They just they just take the difference. They take the difference. And the whole reason there's too much oil being pushed into the Cushman interchange is because there's no pipeline where they can get the oil down to the refineries where it's needed. So that is a racket. That is a racket, big time. It really is. Rising oil prices too high could backfire. The last global economic crisis caused prices to fall from $150 a barrel to less than $40 a barrel at the end of the year. See, this is what I kind of expect to happen with silver. Silver is going to go ballistic when oil gets up around $150 a barrel or something. It's going to be way the hell up there. That's where I'm probably going to dump some physical too. The possibility that happen again has the Saudis trying to keep prices high, but not so high that they impair global growth. They don't want price to go above 100. So that's why I'm kind of thinking they're going to float down till there's a war, till it's the next thing that comes out. The bottom line, Saudi Arabia is spending at least 130 billion on jobs and housing program at home, an effort that relies on expensive oil. So I think the Saudi regime probably will be toppled when the Iranian war starts, because there's going to be internal people. Well, it's probably the Western people that are doing it, and that's going to be the end of it. That's what I think is going to happen. So, the policies of the oil elite probably are going to come true. Although Lindsey Williams was told a bunch of garbage about these price points for oil, because I'm totally sick of waiting for it. I'm probably going to go back more into leveraged silver, but I'm going to wait, because I want to point out something about some of these funds. I said they erode. For instance, this is the pro shares. You go back a few months, you just pick a date, say around, this is November 30th, AGQ was at $60.61. Today it's not showing today's rise, but yesterday it was $63. So it went up a few bucks. It went up about 5%. You're looking at the velocity shares. It was $48. You're looking at yesterday's $50. It didn't go up as much. So I mean, the fund does erode after a while. But if you're in a hard bull market, this is the place to be. But one thing, Sprott's fund is totally aggravating the heck out of me. And I just want to point out, like, for instance, when they had this drop, I bought some more in here. But actually, even though iShares was following the price of silver, and the premium on his fund dropped from like 25% to 9%, as of today, the premium is sitting at 8%. It's even worse than it was on the day of this offering. And it was even lower than this percentage before. So I'm getting really fed up with this damn fund. And I wouldn't touch a damn thing if this guy ever put out ever again. I would not trust. I think what I personally, I listen to all these silver bugs. Max Kaiser telling me he's a silver vigilante. And I didn't listen to him at first. I was playing AGQ and I made money on that stuff. And I don't want to use that word play, because I didn't really play, In other words, I'm buying Sprott's funds on dips. I don't know why the hell I'm buying Sprott's funds on dips. If I was buying stuff back here, buying physical back here. What the hell did I do that for? I'm listening to these silver bugs like an idiot, and it would have been double. If I actually thought I'm so sure that's the dip, why the hell would I buy more physical silver when I got enough of the junk? Or why the hell would I buy Sprott? And that's what I was doing. So right now I am like totally fed up with this guy, because even from this time here, from here to here, and you're including today's date, and I figured this out on a calculator, and from here to here, you actually had a higher percentage gain in iShares. iShares, the regular iShares, the ones that supposedly doesn't have any silver in back of it. Well, I don't know about that too. I think these are a bunch of rumors out there to keep throwing around left and right, and these are the last people I'm going to listen to. Believe me, I'm totally fed up with them. As far as the premium, I've been tracking that, and so like the premium back when this thing was had the offering, went from 25.5% to 9.1%. So it was starting to go up a little bit, but today we had a good rise in silver prices. So, but the Sprott fund did not move as much as the silver price, so it went up 8%. So I'm really kind of like disgusted with this fund big time, and I'm going to wait till possibly it goes a little bit higher than this. And actually, this piece that I bought in here, I'll probably sell it off if it gets up to about 10%. That piece right in there. I'm going to keep this as like a core fund, because I think it's going to go up more. But what I'm probably going to do And is I want to watch. So I don't think the price of silver is going to go dropping down to like 33 or something like that. It might go. It'll probably go below 35. I don't know. I don't know what it's going to do. But say for instance it goes down at 34.20 or something. What I will do is I'm probably going to go in pretty hard into the velocity shares. Now, if silver just sits at 35 for a week or so, the velocity shares are going to start eroding a little bit anyway. That's why you don't have your money parked in there. That's one reason. You know, I actually pulled the trigger a little bit too. Well, let me put it this way: if I knew every damn thing there was, I'd have a gazillion dollars. There's no doubt about it. You know, made money on it this morning, got out of it this morning. Should have got out of it this afternoon, but you know, there's been times when you wait for the afternoon and silver pulls back too. So you don't know. You know, you don't know 100%. So you know, in other words, it could have reached a high of 35 and a half or 35. 55 or 60 tomorrow, for all I know. It could have pulled back this afternoon. If it pulled back this afternoon, I probably would have bought it and then try to dump it the next day. But I don't know 100% every movement of everything, quite obviously. But what I expect to do is I'm probably going to get back into this thing harder, and but I'm going to wait a little bit on it. And I'm probably, I don't know about this Sprott devil, but that's what I call him because I'm really getting sick of this guy. I don't know how many people could think this guy's deal is such a good deal. I don't think so, not at all. But you know, I think eventually his premium is going to recover if there's enough propaganda out there, so a lot of people will be buying it to the fund. But when it does start to recover, I'm going to start dumping some more of it. But I also kind of plan to get out of this thing completely at the price point of $60 on silver, but there might be a margin rate increase before then, and that is something I'm going to try to look out for. Any articles of anybody selling anything, and you know, if we were astute observers instead of silver cheerleaders, we would have seen that Eric Sprott sold his silver on April 28th. And I remember specifically that it looked like the price was hitting a high, it was pulling back a little bit, then it hit a high, and I was getting nervous about it. But I started listening to other people. I ain't listening to that stuff anymore. And I do feel that pretty soon I'm going to dump into a lot more of these velocity shares versus this Sprott and see if, you know, it's a risky maneuver. It's a risky maneuver. But if you think silver's going to go up to like close to 40 or something like that, maybe it'll go down a little bit from where it is right now, but then it's going to make a run up to like 38, 39 or something. Hey, that's why I'm going to go into the velocity shares. They erode, but if it does that kind of movement within a month, that's a good gain. But I want to put a significant amount of more money on it, so that'll be my bet. I don't know if this is for a fact, but one thing, if I start seeing, say for instance I jump in these velocity shares next week, and if I start seeing the oil pull back, I'm going to be nervous about getting the hell out of velocity shares on any gain. That's what I'm going to do. But if I see oil still going up, I'm probably going to hold in with the velocity shares. So I'm going to also play it that way too, because that kind of tells you about the general market conditions of what's going on. Things are heating up left and right. But if I see, well, for instance, the higher physical silver also goes this year, the more of it I'm going to sell. If, say for instance, silver 75, I'll sell a minor portion. But if it goes up to 80, I'll sell another minor portion. Goes up. If it hits 100, I'll sell a significant portion. Definitely not. It's definitely going to be well under half, but I'll sell a significant portion because I think it would crash like crazy. For a movement like that, it would crash. And then what I'll do is I'll get the stuff back cheaper, and I'll pocket all the cash. So, you know, as far as holding on to shiny silver coins forever, I'm not playing that game. No. And I think this stuff's always going to be there. And you know, the reason I say it's going to be there, because if there really was a physical shortage, the spot price would be a hell of a lot higher. And so, for instance, if you can't buy this stuff, you know, it's going to be $100 an ounce on the market. You'll be able to get it. You'll be able to get it. They're not going to run out of it. They're not going to run out of it. Like I said, they'll knock out photography. They'll knock out silverware, spoons, plates. You know, they'll knock out mirrors. They'll use aluminum on that. They won't be using silver for a lot of things. They'll start using other things in place of it. So it'll be available. It'll be available for investment. But that's when it's going to start going into the bubble. But I don't think 100's going to be the. I don't think 200's going to even be the finish. But at 200, you know, I think this year it might go up 60, 70 more dollars. Probably, maybe more than that. It could spike more than that. If it spikes like crazy, I'll start selling off physical. There's no doubt no doubt about that, because I don't think it's going straight up to like $200 or $300 an ounce. It's not going to do that. That's what I'm guessing. But still, I'm not going. No matter how high it goes, if it goes to like 100 this year, I'm definitely not going to sell half. Not even going to do that. But I'm going to play the game, because as far as I'm concerned, the physical field silver game is a trading game. It is. It is. There's no doubt about it. There's absolutely no doubt about it. And I do understand that a hunk of metal does not produce anything. You know, people want to exchange paper for represent goods and services. They can exchange paper. It's just that a hunk of metal puts the discipline back on the central banks, where they can't just produce more hunks of metal out of thin air. That's the difference. But that isn't, the hunk of metal is not the driving engine behind the economy. I know that, and that's something else I understand. So, you know, I'm going to get rid of, you know, depending on how far high this goes, I'll probably dump a pretty good amount of it. But I don't know exact price points for anything. One thing, like I said over and over and over again, is I'm going to watch that silver-gold ratio very carefully. Now, as far as the, you know, pullback, I don't know. I mean, it could be pulling back tonight for all I know. Maybe not too much. But it could be pulling back tomorrow a little bit for all I know. And there could be some bad economic news on Monday for all I know, too. Now, if I see some of that premium get up to like 9 or 10% tomorrow on Sprott, if Sprott's moving up at a fast, say for instance silver stays flat tomorrow in the spot price, and the Sprott is looking like it had a percentage move upwards anyway, and some of that premium on the fund returned, because I want to make sure at least is at least 9% where it was when I bought this stuff, so it keeps up with SLV. And I'm going to dump that portion that I bought. I'm going to dump that portion that I bought back on January 17th. And I'm going to carefully try to get in more on leverage. Because right now, I think silver is low enough where I don't have to worry about the dreaded margin increase for right now. It's not up there enough. I think it would have to be, you know, well over 40 before they do that stuff. So, but it's going to be a few factors, because I'm not sure. Like I said, if I knew this movement was going to come in silver like this, I would have dumped all the PSLV. I would have dumped everything I had, just dumped it in triple leverage silver and bet 100%. But I don't know. That's the whole point. But I am going to go a little bit harder into it in the future, because I think right now it's probably going to have a little bit of a pullback. And when you're looking at this fund over a couple weeks, usually it erodes anyway, so it might be below 50, you know, for shares, even if the price of silver didn't pull back that much. I don't know. It depends on how volatile it is. But I'll jump in there if there's a hard pullback in silver, a hard pullback in palladium. I'll jump in there. But I'm going to say something else about this palladium double leverage. I was going to use it, but you know, it looks like, I don't know how fast it works when you're just going to sell it, because when you're looking at the volume on a double leverage, some of these new funds that are out there, the volume looks extremely light. even with the oil volume, the triple oil, it just looks extremely light. And that's one thing I don't like about that. I don't know, it makes you wonder how fast or what kind of prices you're going to get, if there's going to be a big spread between, the bid and the ask price or whatever the hell's going on. I'm not sure. Sometimes I don't like that because, like UCO, the double leveraged oil, there's a lot of trading going on in that. But if I looked at the price movement of oil that went up from say 90 to 108, that's about a 20% movement. But in the same time period, silver went up a good 25%. So actually, I think the big winner is going to be silver, even over oil. Because I think, like I said, historically, when we had problems with Iran, even back when 1979, we had these problems with Iran, what happened? That's when silver made its super, super high of, ridiculous amounts of, went up to $50 an ounce, where it actually went up like 7 times in a year. So, I could be missing the boat. I could be, maybe it's going to be coming up here in 2012 for all I know. I mean, I don't know. I mean, sometimes something could. That's what happened in 1979. It went up super fast. It went up 6, 7 times. But if that's the case, like I said, I'm going to be playing in and out with the physical too. I think this stuff will be available. People want to think not, fine. I mean, I think it will be available.